Hello there, you're watching the daily edition of Your Trades. This is Priyanka Uppal along with me, Sneha. Clearly, the markets were in a consolidation phase today. Barely 100 points of range we could saw on Nifty today. Nifty, Bank Nifty both traded in a very narrow range today, more or less 100 points on Nifty, Bank Nifty with a range of 300 odd points. And that to me, this is when the global cues were supportive enough. In fact, US, we saw a good session yesterday. We saw cues coming in, positive set of cues coming in from Asia, from European markets also, but Indian markets were on its own way today, especially after a cooler PPI data. Now all the eyes are on the key economic data which has to come from US markets, and that's what could be a big trigger point also. Broader markets also, there was a half a point or half a percentage of cut in broader markets in both mid cap and small cap both. On the losing side, sectors which were on the losing side, top laggards were metal pack, PSC space, pharma space. Metals were at the dragging point. They were hurt badly today because of a Supreme Court order when mining companies will have to pay tax from 2005 to the states, and that's how we saw impact coming on major of the metal counters like Tata Steel, Coal India, Godavari, Ispat, NMDC. All the state governments have a right to levy royalty on mineral-bearing lands, and hence this news actually created a lot of impact on all the metal and mining counters, and so was many of the PSU stocks were also down today. Pharma stock was the third laggard sector today for the day. DVs with a cut of around about 4.5%. Negative news coming in for DVs Lab, and hence, in fact, the entire sentiment of the market was very shaken. It was more of a that Nifty has just holded on to its ground of 24,100. That's a crucial level. But then overall, the sentiment was weak today. Broader markets were weaker today, though we have managed to close in green. But then sentiment looks to be very poor at this point in time, Snehi, and especially that time when we have supportive global cues. But it's a truncated week. Tomorrow we are off, and let's see how we pan out on Friday. But what did you specifically notice today?
Absolutely. Well, we seem to have ended in the green, but it's absolutely lackluster when it comes to the markets. And like Priyanka said, very flat day coming in for us. Although some more buzzers we were spotting in today's trade, Piramal Enterprises is one of the top losers of the street today on the back of a weak set of numbers and even bleak management commentary coming in, wherein they say that the pressure on the NIMs will be continuing for the couple of quarters coming ahead as well. Apollo Hospitals, a host of brokerage notes coming in, so that stock held up pretty well in today's trading session. You also had, the Apollo Hospitals has ended the day with a cut of 1.1% off the highest point of the day. You also had DV's Lab that was in focus, but tanking away in today's trade, cuts of around 4% coming in on that stock as well. And health insurance premium is expected to rise by 7 to 10%. That's what sources tell us exclusively. And on the back of that, you had a couple of stocks that were buzzing, but PB Fintech, a major insurance player, that stock was up and away almost 6% in today's trade. You also have a word on the street, some chatter that the next GST meeting, the government is going to be mulling the GST on health insurance. So positive news flow, 6% higher is where PB Fintech has closed today as well. But other than that, let's talk about some big gainers and losers today. EPL on the set of brilliant numbers, 12% higher. Chennai Petro, Paytm surged 6.5% today. Uno Minda, First Source, Mahindra Lifespace, all of these with gains of 4.5 to 8%. On the flip side, top losers today, you had HEG, NMDC, BEML, Mahindra Holidays, PNC Infra, Praj Industries, Hindustan Copper, anywhere between 4.5 and 8% of cuts coming in on all of these stocks as well. But let's keep the discussion going. Let's bring on board Richard Jain, the lead research at 5paisa.com. And Richard, thanks so much for joining us. Give us a sense of the kind of lackluster or flattish moves we are seeing in the market. Do you think this is the best scenario as of now? Because, well, as long as we're not tanking away, even a flat move is a good move. Is this your verdict, or are you penciling in any type of up move from here going ahead?
Yes, hi, very good afternoon. Well, I think we have a midweek holiday tomorrow, and that's the main reason we witnessed such a range-bound trading session today. There's even the important data which would come out in the US in the evening, which could have a directional move in the global markets in next 1 or 2 days. So I think that was the main reason we witnessed some range-bound session today. But overall, what we have witnessed in last 2 weeks in this first half of the month of August, that the markets have gone through some corrective phase, but still there are no signs of a resumption of the uptrend. 23,900 is the immediate support, which is the last week's swing low. But on the high side, the pullback that we witnessed from the 23,900 zone was not able to surpass its immediate resistance of 24,400, 450. So I think until we surpass above the 24,400, no, market seems to be still into that consolidation phase where 23,900, 24,400 would be the trading range. And once we see a breakout on the either side, then we will see a directional move. So considering this recent correction, we are a bit cautious, taking more of a stock specific approach rather than taking any directional bet on the index. And only below 23,900 or about 24,400, we would advise to take some directional bet on the index.
Since you said that the clear direction is not visible for the indices right now, Ruchit, then which would be the trades that are safe enough to take at this point in time? Would IT or auto would be a pack that you would eye on?
Priyanka, I think we would see some kind of volatility in both this space, IT and auto, and that's why we are focusing here more on some of the defensive kind of names where the reaction to the market volatility is not much. And one of the name within the insurance space, I think, is ICICI Lombard, which we are betting on for creating fresh long. So recently, we have witnessed a good outperformance last 2 weeks where the markets have corrected. The stock has not seen any kind of price-wise correction. It has been more of a time-wise correction, rather than price-wise correction. So important supports are still intact. So at current levels also, I think if we see any kind of resumption of the move, then we could see targets around 2070 very soon. So short-term traders can go long over here with stop below 1930 for potential targets of 2070. And another pick would be a buy call in Titan. So this is one of the name which has already gone through a corrective phase. Some price-wise correction was seen post the month of February. If we look at the all-time high in the stock, it was posted much higher from current levels in February month, and since then we have seen some correction. Now in this correction, the prices have managed to take support around the weekly 40 EMA. So downside seems to be very limited for here too. So hence Titan could be bought at current levels with stop below 3,300 for potential targets around 3,560 in the short term.
All right, so Titan and ICICI Lombard, two long calls coming in. Thanks so much, Ruchit, for joining us. On that note, we'll let you go. But let's keep it going then, and time to talk about the word from the wise. And today, that is Harsha Upadhyay, the CIO of Equity at Kotak AMC. He's seeing better days for the top 4 cement players as capacity expansion is on the cards. He also expects volatility in pricing and demand going ahead for the cement space. Let's go across and listen in.
I think clearly what we have seen in the market is some bit of corporate actions where some of the players have entered into the segment and also bought into some of the smaller capacities. The consolidation is still on the way. And at the same time, the pricing scenario has not really changed, given the fact that the market shares have not stabilized for the larger players. But our view is over the medium to long term, once there is some stability in terms of the market shares among the larger players, definitely industry is in for better days, given the fact that the top 4 players over the next few years are also likely to increase the capacity at much higher rate compared to some of the smaller ones. And we could also possibly see more corporate actions in the segment. Clearly, industry is moving towards further consolidation, and any industry which consolidates should be good for investing. And that's the view we have. However, in the very short term, there will always be volatility in terms of pricing, demand, etc., which we have to keep in mind.
All right, that's the word coming in from Harsha Upadhyay. We stay for a short break here. More to come on the other side of the show. Don't go anywhere. Welcome back. You're watching Your Trades, and now more from the derivative side. Clearly, the trend has changed. There's a short built up on Nifty as well as in Bank Nifty. And if you see the kind of call writing which has happened, and in fact the put writing which has happened, looks like we are in for a very short range ahead also. On active call side, immediate strikes like 24,200, 24,300, they have been sold onto, and now they act as a resistance. We do have a cushion at 24,000, 24,100 because that's the active strike in terms of put writing also, but the range looks very narrow. If the immediate calls like 24,200 are being sold out and 24,100 as a put writing is being done, that means it gives us a very small room ahead, Snehi, what derivative data right now suggests.
Absolutely. So that's the levels to watch out for on the derivatives front. But let's talk about the big story of the day, and that has to be the Supreme Court verdict coming in across all mining related companies. They've said that the states can tax mining and related activities in a retrospective fashion on transactions after the 1st of April 2005. Let's go across to my colleague Samit to understand the implication of the top court's verdict in the mining tax case and all the stocks and companies that stand to be the most affected from this verdict. Samit.
It's an important decision that has come in for the metal sector in all. If you see, Supreme Court has now given the state the power to charge royalty, which moreover they can now charge for it with a retrospective effect now, which means that these royalty charges will be applicable from the 1st of April 2005, and these metal companies have a timeline of around next 12 years to make these payments over a staggered manner. Also, Supreme Court has said that the states cannot charge any penalty or interest on this past tax demand. So that's something positive coming in for the companies, given the fact that they have 12 years and no penalty or interest they need to pay on the retrospective demand or the retrospective tax amount that they need to pay. Now, as per Phillip Capital, this announcement is more negative for steel companies. Only Tata Steel so far has given the potential liability of around 17,300 crore rupees. They're also saying that all captive mines will also be impacted going forward, and for steel companies they are expecting the impact to be anywhere between 2 to 6% of the total market capitalization, but for aluminium companies they are not expecting much of an impact. Also, Hindalco yesterday on its conference call said that there won't be any retrospective impact on them, and going forward the impact on their EBITDA, consolidated EBITDA, would be just around 0.05%, and the broker is also saying that the aluminium companies impact overall would be just 1 to 2% of the market capitalization, and they are also saying that the only respite that has come in from this order is the fact that the payment is staggered over the next 12 years, and there won't be any interest and penalty that the state companies could charge, which means that the cash flow impact would not be much severe on any of the companies. Apart from that, Nuvama is saying that in worst case, if you see, the Tata Steel impact is around 17,300 crore rupees, which is nearly 14 rupees per share impact. SAIL worst case impact could be close to 3,000 crore rupees, which is a 7 rupees per share impact. For Coal India, the worst case impact could be around 6,000, which is a 10 rupees per share impact, and for JSW Steel, the worst case impact could be close to 5,000 crore rupees, which is a 20 rupees per share impact as per Nuvama. And lastly, for Hindustan Zinc, they're expecting the worst case impact to be close to 2,800 crore rupees, and which translates into a per share amount of close to 6.6 rupees. So that is what the brokerages have so far understood on this Supreme Court announcement that has come in.
Somit, for bringing in the entire matter, even giving a perspective from the brokerages, what they have to say on the different companies hit, which possibly could be possible because of this impact. We did try to gather some responses from the metal and mining companies only. Spoke to Hindalco also and Hindustan Zinc also. Hindalco's MD Satish Pai, let's listen in what exactly he had to say, and also what did Mr. Arun Mishra of Hindustan Zinc has to say on this matter.
So I think for us, what we worry about more is on an ongoing or a prospective basis. We do hope that state governments, central governments as a combination do not put very onerous taxation on the mining industry, because India needs more mines to open. We need more metal, we need more minerals. So I think that any concern we have is on a prospective basis. We hope that taxations will remain reasonable.
No, it's not. The state government is empowered to levy royalty on mining. It has defined that royalty is not a tax, and state government is free to impose any tax on mining-related or land-related matters. So, as far as royalty is concerned, there is GST on royalty, which is tax on royalty, which we are already paying. So, it does not affect us in any case, whether it is state or central government thinks of levying a tax on GST, a tax on royalty, unless the rates go up. In Rajasthan, government had a tax on land tax, that there were certain demands which we have already cleared, so we don't have any impact on there. If the states put some more new taxes and Supreme Court decides that new taxes will be applicable on a retrospective effect, then we would know whenever it happens. But we are not the only one. There are many mining companies in India, including large government-owned mining companies. So I'm sure both governments, center and state, will take decisions in a very matured manner, not to jeopardize economic activity, which is the most urgent need for the entire country right now.
All right, let's step away from that story, talk about one of the top losers in today's trading session, and that was Piramal Enterprises. Let's understand what has spooked the stock so much today that it was down almost, in fact, more than 10% in today's trade. Lots of factors that have contributed to this. First up, let's talk about the numbers. Net profit has fallen 64.3% on a year-on-year basis. So that's factor number one. Number two, the NIMs for the growth business came in just at 6.7% versus 7% on a sequential basis. So slight drop being seen on that front as well. Now the management is targeting to reduce the legacy AUM to less than 10% of the total AUM by the end of FY25, and this is something that may entail elevated credit costs all throughout FY25. Short-term trends, so they're showing some pressure on NIMs due to the rising cost of borrowing. The company has also increased its stage 2 provisioning coverage on the retail assets to 123 crores from 32 crores just on a sequential basis. So very big jump coming in on provisioning as well. The PCR, which is the provisioning coverage ratio, used to be at 3.3%, and that has now been increased to 11.8% at the full portfolio level. So very big jump coming there. The management also shared that its borrowing costs continue to rise, and there will be pressure on NIMs going ahead over the next 1 or 2 quarters. And you also have a couple of brokerage notes coming in. CLSA has downgraded the stock to an underperform rating from a hold, cut the target price to 860 rupees from 950 earlier, and you also have Access Capital that's downgraded the stock to reduce from an add rating, cut the target price to 930 from 950, and they all say that the management has indicated near-term pressure on the cost of funds, and that is not panning well for the stock. So on the back of that, this stock traded with cuts of 10.5%, closed at the lowest point of today's trade.
All right, so that's a big cut coming in on Piramal Enterprise also. But then let's get you some more stocks which got impacted because of the numbers. After posting Q1 earnings that has come out better than street estimates, we caught up with Kunal Malani, CFO for SAMIL, on their capex guidance and their plans going further. Let's listen into what he thinks about maintaining the capex guidance for FY25.
Last quarter, we had highlighted our total capex guidance for this year was expected to be 5,000 crores plus minus 10%. While we are re-evaluating this number in light of some of the increased business perimeter, we have acquired Yachiyo Lumen Industries and ADI Industries in this quarter. So while we will reassess that requirement, but right now with the way things stand, I think we should still be somewhere between the 5,000 plus minus 10% levels itself. This quarter, we have done around about 1,070, 1,080 odd crores. So actually been a little bit lower from a run rate perspective than what that guidance is. But yes, overall, I think we should hopefully be able to manage it within the 5,000 plus minus 10%.
All right, well, let's also shift focus, talk about yet another earnings candidate. Nifty 50 company Apollo Hospitals came out with its numbers yesterday, although inline set of numbers, but brokerage notes were not sounding very positive, and the stock is trading with cuts of 1.1%. That's where it closed the day. Now, Sunita Reddy, Managing Director at Apollo Hospitals, she expects the RPOB and occupancy to improve in the coming quarters. Let's go across and listen in.
Hopefully, in the next 4 to 5 quarters, we'll see this because, definitely we are working on cost, and there is some reduction coming in that will play out by the end of the year. Navi Mumbai is doing very well. They're at an occupancy of 68%, and that Ahmedabad is slightly muted, and there's, let me say, there is a lot of competition in Ahmedabad. Nasik, we have... our intention there was to take healthcare to Tier 3. It becomes a referral into Navi Mumbai, and as a referral center, it does very well. And it is, it does a bit of more than a bit of break even. It does contribute 2 crores to EBITDA. So it serves its purpose.
All right, moving on. Let's get you more stocks that were buzzing in trade today. Jinay gets all the stocks that were on the quarterly updates or maybe other news which impacted the stocks movement today. Jinay, over to you.
Well, as on the back of earnings, Gabriel India was in focus. If you look, a good set of numbers, revenue coming in, improving about 17.5%, net profit up over 37%. EBIT also saw a good expansion of 32%, whereas margins came up at 9.6% versus 8.5%, so 100 basis points up. Moving on, Mazagon Dock was in focus as net profit jumped about 121% to 609 96 crores, whereas EBITDA saw a jump of 2.7 times, coming in at 642 crores versus 172 crores year-on-year basis, and the margins also a good big improvement, coming in at 27.3% versus 7.9% year-on-year basis. Moving on, AID Perry, fixed set of numbers. If you look at revenue, down about 4%, net profit down 30%, EBITDA also down about 28% at 483 crores, and margins also contracted, coming in at 7.2% versus 9.5% year-on-year basis. Moving on, PSP Projects was in focus. Company received an order worth 484 crores from a civil and structural work for the Himalaya project in Gujarat. And lastly, Power Mech Projects was in focus, as board will be meeting on August 22nd to consider bonus shares.
Janay, thanks so much for taking us through that list of all the big buzzes in today's trade. But let's also talk about one space that was up and buzzing, and that was the insurance space, because we have word from sources, an exclusive word coming in, that the health insurance industry is planning to hike its premiums across most categories, and insurance are planning a 7 to 10% hike in majority of their products. Now, the policy with pre-existing disease cover, the waiting period coverage will be seeing more increases, and policies with high sum insured may also witness some hikes. The new IRDAI regulation on reduction of waiting period, moratorium period is also a reason behind this hike. In fact, multiple reasons coming in over here. Medical inflation, claims experience, loss ratios on select products could also be reasons for the potential upward revision. The new rules to have an impact on claims outgo as well as the frequency of the claims, and hikes may vary company to company as per the portfolio performance as well. And as a notice may be given to policyholders by insurers about the premium hike while sending the renewal notice. So that's the expected visibility on when we can see this hike kicking in. But well, yes, exclusive word coming in from sources, a premium hike to be undertaken by most health insurance players across the ambit.
All right, premiums are set to rise. That's what the news coming in from exclusive sources. Well, that's all in this edition of News Bulletin. It's a truncated week. We see on Friday, but then Friday we have more clarity coming in from US markets. At least the CPI data would be there, and which could help us understand how is Fed going to approach the interest rate cut scenario. Till then, enjoy your small holiday. Thanks so much for watching. See you on Friday. But then news and updates continue on ET Now.